Limited, an existing company is planning to introduce a new product with a project life of 8 years. Project cost will be 2 crore 40 lakhs rupees. At the end of 8 years, no residual value will be realized. Working capital is 30 lakhs will be needed. The 100% capacity of the project is 2 lakh units per annum. So you can manufacture and sell 2 lakhs units per annum. But the production and sales volume is expected to be as under. So not all the company works on 100% capacity because of public demand. Number of units that will be manufactured in year 1 is 60,000, year 2 is 80,000, year 3, 4 and 5. This does not mean year 3 to 5 it will be total 1,40,000. It means the 3rd, 4th and 5th year, every year the sales and manufacturing will be 1,40,000. 6, 7 and 8 years will be 1,20,000 units. So now you will have to draw all 8 columns 1, 2, 3, 4, 5, 6, 7, 8. Other information. Selling price per unit is 200. Variable cost is 40% of sales. Fixed cost per annum is 30 lakhs. And the advertisement expenditure is also given in a separate manner. Income tax is 25%. Straight line method of depreciation is permissible for tax purpose. So SLM method I will be using it. Cost of capital is 10%. Assume that loss cannot be carried forward. I will explain you this. Assume that loss cannot be carried forward. This is related to income tax. Present value of 10% is so and so respectively. Advice about the project acceptability. So what we need to do is for first 8 years, we will be finding out sales, variable cost. I will be getting profit. I will try to convert it into cash flow. I will find out present value of cash inflow minus present value of cash outflow. I will be getting answer of NPV. If NPV is positive, I will accept the project. Otherwise, I will reject the project. Sir, what is difficult point in this question? There is nothing difficult except the sum is very much lengthy. I will be solving it in Excel, so it will become somewhat easy for me. So you need to keep your question open. Now question is not on the screen. What is the sales for 1 to 8 years? It is given. Sales of first year is 60,000. Second year is 80,000. Third, fourth and fifth is 1,40,000. It is third, fourth and fifth, 1,40,000. 6, 7 and 8, 1,20,000. This is sales unit. This is 1,40,000 and 6, 7 and 8 is 1,20,000. How to find out contribution? It is sales minus variable cost is contribution. Or I can even do this. Sales multiplied by contribution per unit. This will also give me same answer. Now what is contribution per unit? What is selling price per unit given? Selling price per unit given is 200. And variable cost is 40% of sales. So variable cost per unit will be 40% of this is 80. So contribution per unit will be is equal to 120. Contribution per unit is 120. Right. So how to find out total contribution? Number of units sold multiplied by contribution per unit. Sir, if you want to find out total contribution by finding out the sales minus total variable cost, you will be getting same answer. I have done contribution per unit and now I am multiplying it with sales figure. So I am having sales unit. I know contribution per unit is 120. So I can just do this column multiplied by 120. I will be getting answer of contribution for all 8 years. What I have done? I have done this column multiplied by 120, which is contribution per unit. Contribution per unit. This is a incorrect column, right? I can directly find out total contribution. How? Is equal to this column multiplied by 120. It remains 120 every year, so you don't need to make a column for contribution per unit. What is fixed cost given in the question? You need to see the question. Fixed cost per annum is 30 lakhs. So every year fixed cost per annum remains same, which is 30 lakhs. And every year it remains same, so every year the fixed cost will be 30 lakhs. There is also a column of other expenditure. If I can say it. This is other expenditure. In addition to this, advertisement expenditure will have to be incurred. First year expenditure is 50 lakhs. First year other expenditure is 50 lakhs. Second year other expenditure is 25 lakhs. Three to 5 years it is 10 lakhs. And 6 to 8 it is again 5 lakhs. So these are other expenditures given in the question. Assume how much time it will take to you for you to write down all this. So you will have to prepare 8 columns. In all 8 columns, you will have to write down these figures. Let us go to depreciation. We will have to calculate depreciation from given question. The total cost, project cost will be 2 crore 40 lakhs minus no residual value is 0 divided by 8. Straight line method of depreciation is permissible as far as income tax is concerned. It will be 30 lakhs rupees. Now 30 lakhs rupees will be every year depreciation. So every year depreciation will be 30 lakhs. What will be written down value at the end of 8th year? I have taught you this. If you follow straight line method, your written down value will be equal to scrap value. So there will be no capital gain or capital loss which you will have to consider. Why we are considering depreciation? To find out correct tax rate. Now let us go to this. I want to find out profit before tax. So what I will do? Contribution minus fixed cost minus other expense minus depreciation will be nothing but profit before tax. I can also say it is total cost minus fixed minus other expense minus depreciation. So this column will be equal to total contribution minus fixed cost minus other expenditure minus depreciation. This is my profit before tax. Now this is my profit before tax. See the first year profit before tax for first year is negative. So what would be tax if the profit is negative 0? Sir, if there is a negative profit, we will have to consider tax benefit. Agreed, we should consider tax benefit. But try to understand what is happening. Whenever you are having a loss, you get a tax benefit. How? You might be having other income on which you will have to pay less tax, but it is nowhere written in the question. But one thing is written: assume that loss cannot be carried forward. Now you will feel, sir, it is a very new concept, but believe me, when you do your income tax subject, this will become very easy. What does it mean? Whenever there is a loss, say of current year, loss is 100 rupees. How it will give you tax benefit? In next year, when you earn a profit of 400 rupees, you will not have to pay tax of 400 rupees. This loss can be carried forward. This is a loss. Last year I have incurred a loss of 100 rupees. Current year I am having a profit of 400 rupees. This loss will be allowed to be deducted for me. This is 300 and say my tax rate is 40%. Now I will pay 40% on 300 rupees and not on 400 rupees. What does this mean? 100 rupees loss is allowed to be carried forward to me. Last year there was loss. It can be carried forward in current year. If current year there is a loss, it can be carried forward to next year. But in this question, it is clearly written that assume that a loss cannot be carried forward. So in current year, tax will be 0. But this loss cannot be carried forward in next year. So next year I will pay normal tax. What is the income of current year is 11 lakhs and tax rate is 25%. So income tax will be 25% of this is equal to this multiplied by 0.25. It is 27,500 and it will remain 25% for all years. Now there is no negative figure, right? So this will be also this column multiplied by what I have done, profit before tax multiplied by 25%. In first year I have written 0 just because there is a loss. I will not have to pay tax and that loss is not going to give me any tax benefit. So I am even not considering tax benefit because there is a hint given in the question that loss cannot be carried forward. So this is how tax is found out. Profit after tax is very easy. It is profit before tax minus taxation will be profit after tax. In first year the answer will be negative, in all other years answer is positive. All right, working capital. There is a concept of working capital. We have done working capital. Working capital is cash outflow for 0 year and it is a cash inflow in last year. What is my working capital? 30 lakhs rupees will be cash outflow in 0 year. Let me do 0 year over here. It is cash outflow at the end of 0 year will be 30 lakhs. It will be cash inflow at the end of 8th year. So at the end of 8th year, there will be cash inflow and there will be cash inflow of how much? 30 lakhs positive. Working capital will not be affected at any point of time, other time. So working capital for all other years remains 0. Working capital is cash outflow at the end of 0 year and it is cash inflow at the end of last year. last cash flows will be is equal to this column plus this column. These are my cash flow. Other all years it will remain same. Just the last year there will be 30 lakhs rupees addition in my cash flow. All right. Now, what is the present value of cash inflow? This column. Present value of all this cash flow, including this negative 38 lakhs. All this cash flow at what rate? What is the cost of capital is 10%. All right. So I'm just finding out present value. You need to find out present value of all 8 years in your calculator. I can do it once I'm having MS Excel. I can do it easily. It is NPV in the bracket. Rate is, what was the rate? 10%. Yes, all right. So it is a 10%, comma, of all this. It is 2 crore 28 lakh 81,905 rupees. All right. This is my present value of cash inflow. What is present value of cash outflow? Number one, working capital, which I have written it over here. Number two, at what rate I will be purchasing the machinery? 2 crore 40 lakhs. 2 crore 40 lakhs. 2 crore 40 lakhs plus 30 lakhs is 2 crore 70 lakhs. 2 crore 70 lakhs will be my present value of cash outflow. 2 crore it is a 2 crore 70. My NPV will be hence this minus this is minus 40. Right. I have made some mistake, I remember. Exactly. What is the mistake? I have not added the depreciation, right, for finding out cash flow. So how to find out this cash flow? See, this is a benefit in Excel. I don't have to change everything. How I am finding out cash flow is equal to profit after tax plus depreciation. Depreciation added back, I have forgotten. I have deducted it, but I have not added back. Plus this working capital column. So what I have done, profit after tax plus depreciation plus working capital column will give me my cash flows. And this will change all the answers, and my answer will be a correct answer. All right. Present value of cash inflow. What was my mistake? I have not added depreciation. Once I add depreciation, I will be getting correct cash flow. Present value of cash inflow is 3 crore 88 lakhs, and present value of cash outflow is 270 lakhs, and my NPV is 1 crore 18 lakh 86,683.98. This is how I do a capital budgeting question in your MS Excel. Yes, in examination MS Excel is not available, but in real life, whenever you are taking any decision, any capital budgeting decision, you will not be writing down all the figures. Some tips for examination. Please try to concentrate. This question, if asked in examination, is not difficult, but will take lots and lots of your time. If I am in your place, third, fourth and fifth year should be done together. So how I will be writing down the columns heading? First year, second year, third, fourth and fifth will be my third column. And 6, 7, 8 will be my fourth column. So instead of 8 columns, I'll be preparing only 4 columns. Also, sir, in 8th year, there is this cash inflow. This should be treated separately. You can find out present value of this 8 lakhs and add it to your present value of cash inflow. Otherwise, this all figures are remaining same. So how I read on the columns adding is, if I was in your place, I would have written it in this manner. That is first year, second year, third, fourth and fifth year total, sixth, seventh and eighth year together, not total but together. Sorry. At the time of finding out present value, you will have to use your brain and you need to find it out logically. Because suppose this figure is, what is the figure of third, fourth and fifth year is 10 lakh 35,000, right? 10 lakh 35,000. So third, fourth and fifth year, the figure will come 10 lakh 45,000. Now you need to understand this is not a total figure of third, fourth and fifth year. Every year there is a cash flow of third, fourth and fifth year. Very helpful in your exam, in your suggested also it is solved in this manner. So you can just see one time what they have done, why they have taken third, fourth and fifth year together. Sometimes also people do this. They take 8th year separately because there will be working capital release and other points, scrap value if there is a scrap value in last year. So they might keep last year's column separate and other columns which are same, they may combine it. This is question number 3rd of our classwork.